Ira Epstein, and here we are with your financial market wrap-up. And this wrap-up is for the evening of Wednesday, the 18th of February, 2026, and we're getting on to 7:15 p.m. Central Time. We had a rough 48 hours. I couldn't even put out the updates last night. I apologize. I'm back to it today, but we had a family member that didn't do well and had to take care of things. As you can see, the metal market's dropping away tonight. Energy's holding on to the big gains that they made, and I want to repeat, I expected nothing out of the U.S.-Iran talks. Zero, other than everybody buying time. The Iranians will come out and say, well, we made big headway, we're now focused. They're the only ones saying that. The world knows what these meetings are about. Three elements. Nuclear, stop the missile programs from getting longer range, and stop giving money to the insurgents. They refuse to discuss two of those. They want to discuss one. Their solution is they'll dilute the 60-grade uranium that is approaching arms level on their own to make everybody happy, but they have the right to continue to enrich. Okay? Why did they go to 60 unless they're trying to develop nuclear? Why don't they answer that question? All right? They didn't have to go that high. When we took a look at the grain market, you got some reports coming out this week, so pay attention to them. When we look at the bonds and notes, they're sort of stuck right here. They're hanging around the 403 to 420 level. It's back and forth right in there at this point in time. And the stock market, I think bottom pickers have come out. I said that this morning when I put out the update, and I'm saying it again. That's what I think is going on. The two strongest to me look to be potentially, believe it or not, the Russell still and the Dow. Those are the ones that I think look the best. Now, let's talk a little bit about where we're at in the markets. Or should we go at first and look at tomorrow's reports? Why don't we do that? You're going to get the jobless claims report, and that's 7:30. You're going to get the Philly Fed Business Activity Index at 7:30. We're going to get the U.S. trade balance data. That's going to come out at 7:30. The National Association of Realtors U.S. pending home sales. That will come out at 9. The Conference Board is going to give us their leading economic indicators at 9. At 9:30, you're going to get natural gas. And the EIA. We got the API tonight. Now it's going to be the EIA. Everything got pushed back, as you know, a day because of everything, and I just happened to leave that up there. One other thing that I want to get to. I've done my report that I told you on a currency. I did it on the dollar index. I cover it with weekly charts, daily charts, price counts, seasonal charts. I even bring you into UUP for the ETF traders. So it's got a little bit of everything for somebody. And I bring you up to what I think is going to happen in the markets now and where you're at. How do you view it? You just go to our website at iraepstein.com. On the top left in bright green, you're going to see currency report. You can move your cursor up here. You can move it over here if you're watching me as well on YouTube. Either way, you're going to be able to get to it, or just go iraepstein.com. For subscribers to my services, it's in your member login. All right, so let's go to the chart action here and get us back to where I want us to be. And let me come over here. And there we are in the magic world of the wand. The market on a weekly chart has finally pulled back to the 18-week average of closes, and it's holding it at this point in time. Can it and will it? That's the big question. But you haven't done that in a heck of a long time. So do I think it's important? Yes. Do I think the market's lost its verve to the upside? I do. You wouldn't come there if that weren't the case. When we take a look at the S&P on the sideways action, and that's what you have here, it's pretty clear. On the swing line, it cleans it up. It says to you, there's lower and lows. But it doesn't clean it up completely, because it also says there's higher highs. So you're coming down with that hand, you're coming up with this hand, and my guess is you're going to form a triangle. That's my guess. As the market gets ready for the next move, which way will it be? When I look at where the market could be headed, it could be headed back to the 18-day average of closes in red. The green is the 100-day, so it seems to have gotten into a range where it's semi-comfortable there. It tried the lower Bollinger Band, as you can see here, 3 days ago, and it held it. So you've come back up from there, and that's very typical of the market, and the market's lacking momentum. It's just sort of drifting sideways. When you come to the NASDAQ, it's still under the pressure of AI, and this disruptor that happens is more and more software programs get dismantled. You want to be in companies that won't get dismantled. Apple was safe for a while, and then a week or two ago, had the biggest drop, 8%, as the market took away the safety net. But they're not building software, they're building hardware. I don't think people understand that. Lower highs, but higher lows. Again, I don't trust that. The Dow has got the opposite. It has higher lows, higher highs. So for the time being, it looks to me like the professionals are buying against the 18-day average, hoping the market might be able to get back up to the 50,398 level. When you take a look at the Russell, it fits in with the Dow. Higher lows, higher highs, momentum trying to move its way up. Resistance back at the Bollinger top, 2708, about 50 points, 40 points higher than this. In the DAX, you went from the upper Bollinger Band, and often you make a run back to the 18-day average, which it did, if the market's not going to trend. And that, you heard what I just said. Once you took out this low that I'm pointing at, it changed the picture, and you're void of a trend right now. In the bonds and the notes, they're due to pull back. You had almost 3 days in a row being over the upper Bollinger Band. You only stay over it 5% of the time, and it's pulling back from that. The 2-year, same thing, but never stayed the 3 days over. Just spiked up to it 2 days in a row, let go, and now it's trying to find itself. The first support level's right here. You saw it stop there during the day at the 100-day average, and it's doing it one more time. I don't see a trend here to trade off of, though. I see momentum down, bias up, and you got a higher high and low pattern. In the dollar index, I look at the next resistance points as the Bollinger Band, right on up to the 200 and 100-day average, but it is an overbought market. Let's look at my report. It might help you. And as you're coming down, because the dollar goes up, the euro's going down, be careful here. You're getting oversold. This should be the next big support zone in that market. Miss Lagarde looks like she's going to take an early leave from duties at the European Central Bank so that the bankers can get everything done before President Macron leaves office. They're fearful that if they let the French election happen before they do that, who gets in place could be a problem for the market. So look for that to occur. The Japanese yen has found its way back into a downtrend. You have lower highs, lower lows, you're under the 18-day average, and momentum is turned down. The risk in the trade is to not get back over here, the 65.70.5 level, about 100 points higher, and if the market opens its door up, you might be headed wherever that Bollinger Band is. When we take a look at Bitcoin, still bearish. It refuses to embed. So it's an oversold market that can't seem to get anything going to the upside and staying in the downtrend. I hate oversold markets. They're very difficult to figure out a trade with. As you can see what happened here, you exploded today in price in the Brent. All it took was the end of that meeting, and it didn't matter what side came out and said it went well. First of all, I didn't hear the U.S. saying it went well. I heard the Iranians saying it went very well, and that they now have things focused. Okay, higher lows, higher highs. Overbought, obviously military action that Iran's doing. They did as tests in the Strait of Hormuz. They're showing what they might do. You know what that's about. In the crude, WTI followed the Brent right on up, but it is very overbought, not trending at this point, but certainly poking way higher. It's taking heating oil prices up, gasoline prices up, and it's going to upset President Trump. You watch. In the natural gas, you continue on the downtrend, you're embedded, so it's still bearish. So I want to remind you, just go to iraepstein.com, move your cursor to the top here, or hit on YouTube if that's where you're watching that icon. It'll take you to our website, And then look in the top left, you'll see the currency report. My reports are only up 3 days. It comes off on the 20th. So I'm telling you this now, Friday, it will come off the website. They're intentionally meant for 3 days. I'm Ira. You have yourself a great day. Take care.